In today's video, we are going to learn how to value a stock with the use of Simply Wall Street. They have a fantastic little feature which they're just trialing out at the moment in the beta stage, which is great for especially beginners. If you're just starting out on your investing journey and you want to learn how to value a stock, this is a great way to step in that right direction without running discounted cash flows through a spreadsheet or using some other platform. Now, the company that we're going to be looking at today as an example is Meta or Facebook. By no means is this a buy recommendation at all. You should always do your own research when it comes to investing. Don't listen to a random on the internet. This is more just a bit of a tutorial on how to use this feature on Simply Wall Street, or you may not be aware of it. I wasn't aware of it, but I was having a chat with the CEO, Al Bentley, the other day, and he mentioned it, and I was like, oh, that's awesome. I wasn't aware of it. So that's why we're going over it today. Now, with that said, let's jump on over to the laptop and have a look at the stock valuer tool on Simply Wall Street. So here we are over on Simply Wall Street's main homepage, and today we're going to be going over to the far right here, clicking on this tab and opening up the beta lab. Bear in mind what we're going to go through here today is still in the beta stage, so they are still working on this and sort of working up the tweaks at the moment, but it's still very good. So let's jump into the stock valuator here, and in here you can just type whatever company you may be looking at. Like I mentioned earlier, today we are going to be looking at Meta as an example. Like I mentioned earlier, by no means is this a buy recommendation, but it's a great one just to look at, just to get a gauge on how to use the valuer. So quickly know if a stock is over or undervalued, see how the market expects the company will perform in the future. That's what we're trying to get a gauge on today, how we think the company will perform in the next sort of 3, 5, 10 years. Now, whether you agree or disagree with the market, that's what's a good thing to play around with here with the valuer, play with the growth rates. And then we can save that valuation so you can review it and come back and look at it at a later date if you wish. So here we are currently, as it stands today on the 28th of July 2022. The current share price for Meta is $169.58. And the market currently saying that growth in the business is going to be declining at 7.4%. Whereas if we look historically down here, last year profits grew by 10.7% and profits over the last 5 years grew at 22.7%. So now it's up to you where you think the future of Meta will be in the next sort of 3, 5, 10 years, and you can play around with the inputs here simply just by sliding this here to the right. So let's say you think profits are going to decrease by only 3% or 3.6% here, then currently the shares should be trading around $200. Now let's say you think, no, I think profits going to grow by maybe 5.3%. So currently, then the share price should be sitting around $300, currently making it 44% undervalued here. And also, if we carry on down here, we can see here covered by 52 analysts, and out of those, the most bearish are putting it at $180, which would mean the profits will decline by 6.1%. So that's still currently under where it's currently trading at today. Then the most bullish on the other end of that, they're saying that profits will grow by 15.5%, with giving it a share price around that $466 mark. And then just industry stats here. Companies in the interactive media and service industries declined profits by 32.7% last year, whereas companies in the United States of America market grew profits by 22% last year. So that's just something to help build your case around where you may see the future growth within Facebook. Bear in mind they are spending a lot of money on Meta. Now, if they can pull that off, we may see some growth come back to the company. Now, let's say you've sort of mastered that, but you want to sort of play around with the numbers a bit more. You can move into this advanced input section here, where we can actually play with the discount rate. Currently, they have it set at 7.18%. By all means, you don't have to touch any of this. You can just go with what they've got set up there. But if you want to start having a bit of a play around and play with different discount rates here, maybe you want to give yourself a bit more margin, you could increase that discount rate up to 10%, let's say. The perpetual growth rate. So by default we use the 10-year government bond rate of the country that this company operates in, which is currently 1.94%, which is a good sort of rule of thumb to go with there. I wouldn't be playing with that one too much. And now they've only given it 3 years till judgment day on the business, which is what Buffett sort of refers to it as. But you could run this right out to 10 years if you like. Anything past 10 years, it's very hard to sort of forecast those future cash flows. So by all means, have a play with that if that's something you want to play around with. But that's pretty much it, guys. Fairly straightforward. If you do want to try out Simply Wall Street, I'll leave a link in the description below. Now, this is affiliate link, so I will receive a small commission if you were to go through and sign up for a paid plan. But like I said, they do have the free option as well, which is great, especially if you're just starting out. I think you can trial up to 5 different companies every month for absolutely no cost whatsoever. But then if you wanted to research 50 or 100 companies, then you might want to look at one of the pay plans. Now with that said, that's it for today's video. Any questions, just definitely drop in the comments below and I'll do my best to try and help you out. Stay safe and we'll catch you in the next video. Cheers, guys.